Everyone thinks the S&P 500 chose its direction, but there's one level on the chart that usually decides whether this thing turns into a continuation or a full fake out. And if this breaks the wrong way, most traders are positioned completely backwards. So let's read this chart together. We have this bigger move that has pushed up in the shorter term, and we've pulled back and retest the high. Okay, now at this point, three variations are likely to happen. The first one is going to be the fact that we actually end up falling back down into this base of support right here. And then we kind of need to figure out what's going to happen next. Are we going to pop back up, which is most likely, or do we kind of cascade and fall lower? So just be aware that the first scenario has us coming back all the way to this prior level of support at 68.13 and a quarter. Okay. Now, the secondary variation is going to look like a breakout. Okay, now the breakout will have to be strong based on where we are currently, and it should basically be some sort of variation like this where we just kind of explode going higher. Okay, if you get that explosion, then we simply now need to wait for the next pullback as the market continues to push higher. All right, now the third variation, which I think is a little bit more appropriate for today, is going to be the fact that we could form a range. Okay, so right now what we have here is a pretty decently bullish move higher into a consolidation. Now this is going to turn out to be a range. We just need to be aware that this kind of governs its own structure. So what we should see is a fake breakout to the downside. Let me get that back up here. We should see a fake breakout to the downside. And in that scenario, we can look for buying opportunities off that low to essentially rotate now back to the upside. All right. Now, based on where we are currently, arguably the range and the formation of happening is going to be somewhere right in here. All right. So once we figure out the deviations above and below, that kind of tells us exactly what we need to know and how to figure out the extremes for this. So you're going to have it something like this and something like that. So with that being resistance overhead, you can see the exact extent of which we really need to do to break out through to be a continuation bearish or bullish. So if we do end up like folding and going lower, then now you clearly know that the market's going to be bearish, which means that we need to continue to look for selling opportunities to the downside. All right. But I would favor the blue case scenario just because of the fact that this is a bullish range. So it's going to be the three variations for today, everyone: bull case, bear case, and neutral. If you want to learn the exact same system and framework for yourself, then look down below for the Discord/Patreon link. Thanks for watching. See you on the next candle.